Twitter plans to hold a shareholder vote early August on its $44 billion sale to Elon Musk. The company says it continues to work constructively to complete the deal. Elon Musk's lawyers have warned Twitter that he might walk away from the acquisition if the company fails to provide the data he seeks on spam and fake accounts. Twitter has said it is continuing to share information that Elon Musk asks for. For more on these headlines, we're going to cross over to London. We're joined by Opeoluwa Dapo Thomas, International Financial Analyst. Opeoluwa, good morning to you. Thank you so much for joining us. Let's start with China's numbers. What do you make of those trade figures for May?
Well, they were surprising. Analysts, we had it at, it was 8-point-something% below the forecast that we had it at. So I think it's quite impressive. If the export was about $308 billion, imports was about $228 billion, and then that means a total trade surplus of $78 billion. So I think, and basically, if you compare it to what we had last year, it's an 82% increase. That is very, very impressive. And it's quite shocking because we expected China's numbers to be down because of the strict COVID restrictions they've got and the strict COVID policies in place. But they have still found a way to keep on manufacturing and keep on producing. So this is basically post-pandemic numbers, if I put it that way. And China is showing that they are finding a way to finally recover or grow away from the pandemic issues that they've had. So, like I said, 82% higher than the forecast, higher than what it was last year, and then, like I said, it beat all analysts' forecast. We also have to look at the trade data. We found out that China has also imported less coal and less oil than it did. So basically, they're using most of the things they've got in their stock. So this shows that they are internally trying to fix issues and they're internally trying to grow their economy, and which is a very, very good sign for the Chinese economy.
All right, from China to Japan, should we be worried about the depreciation of the Japanese yen? What do you make of the trajectory?
Well, the Bank of Japan has surprised us, to be honest. We never expected their stance on monetary policy. Well, every bank in the world or every country in the world is looking towards tightening monetary policy. They have kept their monetary policy loose, if I put it that way. And making it loose is basically, the idea behind it is to try and help Japanese companies improve their profits. So they are one of the schools of thought where they believe that a weaker currency to dollar does not actually will increase profits. And we know how China or different Asian countries have tried to manipulate their currencies. So, but in this instance, the Japanese yen falling down to a 20-year low will get investors really worried because Japanese yen is obviously one of the safe havens that people look at when we're trying to save our money into a currency that has store value, or, like I said, a safe haven. So the depreciation is very, very shocking, and that's because they have taken a different stance from what the global economy or global banks are taking towards a monetary policy. So it's very, very concerning, and hopefully they believe they made the right decision in the interest of their country. We need to understand the peculiarities of the Japanese economy. This is a country where inflation has always been less than 1% for a while, so you can't really do the compare and contrast to different countries. But like I said, I hope they've taken the right decision, but it's very, very worrying for investors.
All right, another worry for investors, the OECD and the World Bank, both this week revising downward their global outlooks on the economies. Is the Russia-Ukraine war impact on global growth, is it much worse than we first feared?
Well, yes, it's very, very important that we understand the reason why they've made this forecast. There's a major headwind there, and that's the fight between Russia and Ukraine. And this has been going on for months. I think this is the 6 months which this war has been going on. And for every time we look at the possible worst case scenarios, the World Bank and OECD have also made forecast changes. World Bank had to revise theirs by almost 1%, and also OECD have done that by 1.5%, from 4.5% to 3%. So knowing these changes, obviously, is basically adapting and accepting the fact that the issue between Russia and Ukraine is going to have a hard time on the economy. And basically this also reflects in commodity price. Like I said, we're in a commodity super cycle now where commodity prices are skyrocketing and basically making cost of living hard for different people. It's basically making inflation high. There's a possible recession coming through, and then all the countries are adapting and bracing up for it. So I think the OECD has finally acknowledged, or is acknowledging, the fact that the Russia and Ukraine situation is not good for the economy, it's not good for the global GDP, and we have to watch out and see if there's going to be further reduction in the next coming months.
All right, Okwe, I know you're in the UK. Do you have a car, and are you spending almost £100 to fill up your tank? Because These numbers are incredible.
It's the worst period of time to have a car. I mean, to fill up a car, to fill up your tank is almost £100, and the government has tried different things. They've tried different things to fix this issue. They've done so many interventions. I mean, you're trying to remove fuel duty because obviously, when you look at the component of fuel cost, you need to understand that you've got tax in it, you've got excise duty, landing cost, distribution cost. So government is trying to reduce how much tax is imputed in the cost of fuel, but basically everything keeps erasing the more oil prices go. And also some companies are also profiteering from this situation. I mean, we have this situation in America, we have the situation in UK, and even in Nigeria, to be honest, where companies are profiteering from these high oil prices and saying, and blaming it on oil high prices and taking advantage of the people when it comes to retailing fuel. So it's very, very expensive now. People are not buying fuel again. People are reducing their journeys. I think everyone now is trying to use public systems of of transport, public mode of transport, because right now driving from different cities, I mean, you can't take a drive from Milton Keynes to London. You spend basically a significant amount, which you would have spent less if you took a public system, a public mode of transportation. So I think people are worried about this, and it doesn't look like it's about to abate unless the government comes in and says they want to reduce their tax levies inside the cost of fuel.
Gosh, that's almost the price of a ticket, or maybe a train ticket, depending on whether you're flying or you're using the train. The U.S., what do you make of the head of the SEC wanting to overhaul stock trading?
We need to understand that one of the silver linings of the pandemic was it brought a lot of retail investors into the stock market. I mean, now your average Joe has a Robinhood trading app, or you're basically a stock app, and everyone was investing in stocks. I mean, that time Donald Trump was also the president. He was always very talking about the stock market going high, and nobody wanted to miss out on the returns of that. So we had a lot of people coming in. We have mom and pop investors coming in. Everyone was getting acquainted with stock trading. But at the end of the day, most people are not aware of what goes on behind the scenes when it comes to stock trading, especially when it comes to clearing firms or the market makers or the orders. So basically, you take an order. If you make an order for a trade, are you getting the trade at the right price? Are the market makers cheating you? So basically, that's what he's trying to solve. They're trying to overhaul the stock trading system where people are not going to get defrauded by slippages or false orders, or what do I call it? Spreads. Exactly, that's the word. It's the spreads between the bid and ask price. So the US SEC is looking at that and saying they want to make the markets more efficient and trying to improve competition between trading apps, where most of them are offering the prices at the right price. Yeah, and that's going to be very important, because it's actually going to affect the returns. If you've ordered for a stock at a certain price, but you're getting it delivered at a different price than what you've ordered for, it affects your returns at the end of the day on portfolio. Realignment. So I think it's a very good move from the US SEC and Gary Hensler.
All right, Opeoluwa Dapo Thomas, International Financial Analyst. Thank you so much for taking us through the headlines. We appreciate your insights as always.